Thanks, Nidhi. So look, it is looking pretty tough. And if I can just give a small overview, things were not looking good even before COVID-19 hit us, right? And fundamentally, I see 3 or 4 sets of problems. First is we already had a very weak financial services ecosystem, banks, non-bank finance companies, and so on and so forth, right? Second, several sectors of the economy, such as the power sector, real estate, telecom, airline and shipping, MSMEs, they were all going through chronic stresses. And when it comes to things like manufacturing or creating large-scale jobs, the way a China or a Vietnam or even a Bangladesh is doing now, we really struggled to do that. In fact, our growth in FY20, the year which ended in March, was at 4.2%, the lowest in many, many years, right? Because the economy was already weak even before COVID-19, it's taking a body blow right now, right? And the lockdown has been intense, very, very intense. So Goldman Sachs has come out yesterday with minus 14.8%. So it's a very, very large number. Even the year thereafter might be a bit of a problem. Okay, yes, no problem in India is not solvable. Every problem is solvable. Okay, but we cannot take it for granted कि solve हो जाएगा. We have make no mistake. This is probably the biggest financial crisis of our lifetime, and I'm saying this after having thought through it. I'm not saying this lightly. It is the biggest financial crisis we have gone through ever. The two are very, very different. Okay, so what I told you about the economy still stands. It is in a bad shape. Make no mistake about it. Okay, in a sense, it's money going in because there is no other alternative, and it is going to this asset. And this is not just India. Look at US. US is in look at what Fed is saying about the US economy. It's saying the economy is in terrible shape. Yet Nasdaq is at all-time highs. Dow is at all-time highs. I said, the only learning is please put adequate money in different asset classes. Put in debt, put in equity, put in commodities, buy a bit of gold, keep something in foreign currency. The RBI allows you to take out money, put some in foreign currency. India's financial sector, like I said right in the beginning, is not in good shape. Okay, it was not in good shape even before COVID-19. Abhi to matlab it's in even worse shape. So their official numbers are whatever, 6.3, 6.5% of advances. That number is not right. The actual NPAs is far higher than that. Okay, like I said, if you have a double-digit contraction in GDP, obviously businesses are doing badly. Even people are doing badly. Yeah. Salaries, have been cut. People have lost their jobs. 83% of India is self-employed or on contract labor or on casual labor. Okay, it is practically on daily wages. Okay. So, there are various reports and various research being done, which indicates anything between 30, 35, 40% of MSMEs. India has 63 million MSMEs, right? 6.3 crore MSMEs. A huge number of them might face existential trouble. They might not survive. My personal estimate is the NPAs could rise to as much as 18 to 20% of advances. So if 1/5 of your book is non-performing assets, how do you expect that financial institution to lend? We will never come out of our rut, because to start the economy running, we need banks to lend money. Unless banks create money and lend money, that you will never get prosperity in the system. Okay, so it is a necessity for banks to be repaired. So you need a one-time solution. I personally like something like a bad bank. Ek bad bank create karo, keep all the bad stuff there, let the government own it, and let the government try and recover whatever it can. Okay, and it's essentially clean up the bad book, the bad loans, do banking reforms, do governance reforms, do market reforms. If you're putting it for the right causes, please create the money. Doesn't matter. One is they have not taken care of businesses, particularly MSMEs, right? To say I will give you loans, I will give you a credit guarantee and therefore 3 lakh crore rupees I'll provide through banks. Arey boss, यहाँ पे sales नहीं हो रहा है, bottom line नहीं है, पूरा loss है. अभी loan देके क्या फायदा है? What is the point of giving me loans, right? I need relief on my bottom line. I don't want debt, right? So that part, I think that the government has not done enough. There has to be definitely more relief coming, particularly to MSMEs. One suggestion I've been giving is, there is 20 lakh crores of loans to MSMEs. Okay, you take 12% as the interest rate per year. That's 2.4 lakh crores for the year. 6 months ka interest aap maaf kar do. That's 1.2 lakh crores. Okay, that's only 0.6% of GDP. It will not kill us. Okay, every MSME, give them this relief ki all your interest the government will pay for 6 months. Okay, just saying that, oh look, we have survived is a terrible thing. Oh, survive, so we'll always do. Never a problem. We survived through the British, so why can't we survive now? You need three sets of people together. One, you need strong, decisive political leadership, which has a clear economic vision. कि boss ये करना है. Okay. Then such a leadership will bring in empowered experts. By empowered experts, I mean people from the industry, people who know on the ground industry में होता क्या है. Okay, not academics like me, not bureaucrats, but actual industry folk. Okay. Third, you need an excellent bureaucracy because there is so much opportunity. Every company wants to come out of China. So these four things, banks, all these other sectors, ease of doing investments and focusing on our children. This has to be done. Fact is, even China itself is trying to upgrade its economy. From earlier being the manufacturing factory of the world, it has a vision called China 2025, where it wants to become the high-tech, high-end kind of production, which means your production of smaller things, the less value-added items, it doesn't want to do, or it wants to migrate away from there. So really look at our opportunity. China, the per capita income is $10,000. Our per capita income is $2,000. We are 1/5 the cost in theory. Why should Apple not produce every single phone, the total phone, not just assembly? Get the chips, get everything to be made in India eventually. Why? China has invested in this for the last 3 decades. And they have done a fantastic job. Okay. The reason why they are so competitive when it comes to the cost structure, the entire ease of doing business out there, and they're so embedded with all your clients as well. They've got an extremely well-oiled machine. So for us to displace China, we are trying to climb Mount Everest. It is my close friend who speaks of this very well. He says, listen, if you look at why ready-made garments, China is the #1 manufacturer. It's because they have one region where he calls it zip to Zara. They produce everything from CMI shows a very bad picture. I think the last report showed 21 million jobs, salaried jobs lost. 2.1 crore salaried jobs, which are the high quality jobs, have been lost. 44% of our workforce is in agriculture even today, only producing 15% of our GDP.
So these are called the Ananth 4 principles. I'm going to be labeling this session as that.
How did China grow to become China? Do you know, for instance, Nidhi, and I'm sure you know this, China, the amount of private sector debt, household plus private sector debt, is 240% of GDP. 2.4 times that GDP is the outstanding debt. For India, it is about 70% of GDP. Okay, 65% to 70% of GDP. Okay, and we are saying, oh God, we have got too much of debt. How can we create more money? The point is, you can create money as long as it is creating output and job. China fudges everything. Their GDP data is wrong. Their COVID numbers are wrong. Half the population doesn't know what's happening next outside world. But they can get away with all this because they've created jobs and output.
Correct. Ladies and gentlemen, we have with us today Mr. Ananth Narayan, the renowned academician. Ananth leverages a 24-year career in banking and global markets and covering India's macroeconomy and financial markets. He is currently Associate Professor of Finance at the P Jain Institute of Management Research in Mumbai. Ananth served as Standard Chartered Bank's Regional Head of Financial Markets for ASEAN and South Asia, managing verticals across 12 countries. After tenures in Deutsche Bank and Citibank. Ananth has served as Vice Chairman of both the Fixed Income Monetary Market and Dealers Association and Foreign Exchange Dealers Association of India, and was also a part of several RBI working groups and committees. He is currently a member of SEBI's Mutual Fund Advisories Committees. He holds a bachelor's degree in electrical engineering from IIT Mumbai and postgraduate diploma in management from IIM Lucknow. A very warm welcome to the show, Insights with Nidhi Verma. And it's really good to see you today, sir.
Thank you so much for having me, Nidhi. It's a pleasure. And thank you to Elite Plus for having me.
Absolutely. The Fitch ratings yesterday revised India's GDP growth rate to minus 11.8% from minus 5.3% earlier. The Q1 GDP has contracted to 23.9%. The growth forecasted for India for FY21 to contracted 10.5%, which they say is the worst in history. With that background behind, sir, how do you see the economy going forward?
Thanks, Nidhi. So look, it is looking pretty tough. And if I can just give a small overview, things were not looking good even before COVID-19 hit us, right? And fundamentally, I see 3 or 4 sets of problems. First is we already had a very weak financial services ecosystem, banks, non-bank finance companies, and so on and so forth, right? Second, several sectors of the economy, such as the power sector, real estate, telecom, airline and shipping, MSMEs, they were all going through chronic stresses. And those stresses were not getting resolved. We were just kicking the can down the road in many ways. Third, and something which is, fundamentally we've not been able to do for many, many years now, we've not been able to create jobs and output inside the country. We have a fantastic workforce. We have very good people, entrepreneurs, hardworking people, social structure. But somehow, when it comes to things like manufacturing or creating large-scale jobs, the way a China or a Vietnam or even a Bangladesh is doing now, we really struggle to do that. These are 3 key problems that were building up even before COVID-19. And in fact, our growth in FY20, the year which ended in March, was at 4.2%, the lowest in many, many years, right? And as a result, the government was trying to spend a lot of money. People sometimes criticize the government and say they're not spending enough. Actually, they were spending a lot, okay? In so much so that they were spending far more than what they were earning through taxes, etc. So their deficit actually was quite large. Now comes COVID-19. COVID-19 is a once a century, pandemic. We had to go through a very intense lockdown, and obviously that will have an impact on the economy. But because the economy was already weak even before COVID-19, it's taking a body blow right now, right? And the lockdown has been intense, very, very intense. So for instance, Nidhi, on 25th of March, when the lockdown started, yes, practically 65% of the economy shut down. Only 35% of the economy was working. And remember, that first lockdown went till 20th of April, and then some small easing happened till 3rd of May and so on and so forth. So even as of end of June, you could argue and say maybe 70-75% of the economy was working. And even that is probably on the higher side, it's probably lower. Even today, probably 85 to 90% of the economy is working. It's still not back to 100%. So it's natural that the slowdown will be very large. We've been saying for a while that it will be a double-digit contraction in GDP. By the way, Goldman Sachs has come out yesterday with minus 14.8%. So it's a very, very large number. Even the year thereafter might be a bit of a problem. Okay, yes, we might bounce back a little bit, but remember, we'll come up from a very small base, low base. So it's a big dhakka. It's a huge body blow to a very, very weak economy. Now, these are numbers. Frankly, numbers don't matter. What matters is how do we come out of this? Yes. The good news, Nidhi, is if we do the right things even now, no problem in India is not solvable. Every problem is solvable. Okay, but we cannot take it for granted कि solve हो जाएगा. We have to. There's a lot of hard work to be done. It's an extremely intense kind of a problem. A lot of work needs to be done to come out of this. So how we come out of it depends a lot on what we do right now. I hope and pray that normally India does the right things under a crisis. We are definitely in a crisis right now. Hopefully the right things happen going forward. But to answer your question, yes. Make no mistake, this is probably the biggest financial crisis of our lifetime. And I'm saying this after having thought through it. I'm not saying this lightly. It is the biggest financial crisis we have gone through ever.
Yes, thank you for putting the ground straight. So any kind of extra optimism that we were looking forward needs to be put at rest. Ananth, we do not see a correlation between the company's results that are coming out and the stock market. 41,000, I remember it was in January. Now it's almost 39,900. How can this be interpreted? Do you think it's some kind of speculation or it's a bubble? It's going to burst?
Great question, Nidhi. So first off, economists should stop pretending they know where markets are going. And people in the market should stop pretending that they are predicting where economy is going to go. The two are very, very different. Okay. So what I told you about the economy still stands. It is in a bad shape. Make no mistake about it. Okay. On the markets, what matters eventually is who's buying and who's selling. and how many people are buying, how many people are selling. That's what matters in a market, right? So all your macro analysis, which I'm going to give you, is useless if it does not translate into flows, somebody buying or somebody selling. Now, by the way, this disconnect between markets and economics has been going on for some time. It's not a new phenomenon. So I'll take you, for instance, take the last 6 years up to December 2019. Okay, so the end of last year. Okay, earnings growth for that 6-year period was just 4.1% per annum for Nifty 50. So every year, Nifty 50 earnings went up on average only by 4.1%. Nifty itself grew every year by 11.6% per annum. So your growth in your Nifty was far, far higher than what the earnings, actually underlying earnings was. Okay, so why is that happening? Look, right now, a few things are happening. First, look at people like you and me. If you have money lying in the account which is not doing anything, right? Where do you invest the money? You can't put money in fixed deposits. Interest rates, the average fixed deposit rate across all banks, across all tenors, is about 6%.
Yes.
If you put money in at 6%, after tax, you will get less than 4%.
Yes.
Okay. The perceived inflation, by the way, is already at well above 6%.
Right.
The perceived inflation, if you ask my mother, she will tell you it's about 10%. Okay. So at a time like this, why would you put money in fixed income? Now, real estate also, we can put money, but we don't have trust in real estate because that industry has gone through so much of trouble and it is even now in trouble. So nobody wants to put money in real estate. So that leaves either gold or foreign exchange, take money outside and put it in dollars, or equity markets. On a tax adjusted basis, because we say mutual funds sahi hai, equity markets, that equity culture coming in, etc., we've all decided that equity markets on a tax adjusted basis makes the best return. So in fact, in that same 6-year period between 2014 and 2019, actually the biggest flows into the market came from people like you and me. It was retail India, which was putting in roughly about, if I remember the numbers right, about 1,20,000 crores every year we were putting into equity markets on average. It was not even FPI. People say FII ka paisa aa raha hai. FII ka paisa abhi aa raha hai. But if you see the last 6 years up to 2019, on average, hardly about 15,000 crores they brought in for the last 6 years per year. It was entirely your money, my money. So if all of us are putting money in the equity market, saying, aur kahin aur nahi dalna hai, so obviously the price will go up. I was speaking to a fund manager the other day. He was saying, boss, he's one of those rare fund managers who says, don't put money in my scheme. He says, I don't feel like buying anything, right? So he says, boss, you give me money, I'll go and buy stocks. You give me enough money, I will drive up the price of coal to the price of diamond. I'll keep buying the stock again and again. So in a sense, it's money going in because there is no other alternative. And it is going to this asset. And this is not just India. Look at US. US is in terrible. Look at what Fed is saying about the US economy. It's saying the economy is in terrible shape. Yet Nasdaq is at all-time highs. Dow is at all-time highs. S&P is at all-time highs. Look at Tesla stock. Look at Amazon stocks. Everything is doing extremely well. So it is a common phenomenon globally. There is a lot of liquidity. People have money in their accounts. Some people have money in their accounts. They have nowhere else to put that money in except in places like equity. Okay, so this can continue for a long, long time. We can wait till the cows come home saying that one day everything has to converge, but we don't know when that will happen. For now, the circus can continue. Personally, I'll tell you what I'm doing, Nidhi. I'm not trying to second guess the market. If you're trying to protect your wealth and your savings, the only learning is please put adequate money in different asset classes. Put in debt, put in equity, put in commodities, buy a bit of gold, keep something in foreign currency. The RBI allows you to take out money, put some in foreign currency, have a diversified portfolio. The best portfolio is one that you didn't have to change between 1st of January and today, whatever the date is. If your asset quality, if your asset allocation has been done properly, you're across all the asset classes, you're reasonably okay. So diversify and keep your risks diversified across asset classes. Don't try and catch the top. Don't try and catch the bottom. Nahi hone wala hai. It's a different world altogether.
Ananth, it was estimated in May 2020 that Indian government may need to recapitalize the PSU banks with approximately 1 lakh crores. By July, we heard that the estimate had moved to 4.4 lakh crores, as per the estimates given by Fitch again. What is the real situation? Even Mr. N.K. Singh, who was the chairman of the 15th Finance Commission, felt that increase was essential. where will the money be found? And if the money is not found, what will happen to the banks and the depositors? Again, the retail people like us, we saw what happened to PMC.
Look, India's financial sector, like I said right in the beginning, is not in good shape. Okay, it was not in good shape even before COVID-19. Abhi to matlab it's in even worse shape. So what is the problem? The first problem is even before COVID-19, we had a lot of non-performing assets. And the problem, Nidhi, is we don't even know what the real size of the NPAs is. Okay, because there is things like forbearance in some, MSME loans, for some real estate loans. Banks don't have to recognize them as bad loans, even if they're bad. Okay, so banks are still okay because they've gone through asset quality review. So they've been forced to come out with reasonably accurate numbers. NBFCs, non-bank finance companies, have not gone through an asset quality review. So their official numbers are whatever, 6.3, 6.5% of advances. That number is not right. The actual NPAs is far higher than that. Okay, this is before COVID-19. So I personally think the real numbers across banks and NBFCs, even before COVID-19, was about 11% of advances, not the official 8% that you hear in official media. Okay. Now, like I said, if you have a double-digit contraction in GDP, obviously businesses are doing badly. Even people are doing badly. Yeah. Salaries, have been cut. People have lost their jobs. 83% of India is self-employed or on contract labor or on casual labor. Okay, it is practically on daily wages. Okay, so imagine the plight of those small businesses. People who are on casual labor, etc. Obviously, people are in trouble. And that will translate into more bad assets. It's a mathematical certainty. So MSMEs, there are various reports and various research being done, which indicates anything between 30, 35, 40% of MSMEs. India has 63 million MSMEs, right? 6.3 crore MSMEs. A huge number of them might face existential trouble. They might not survive because of the nature of the problem, right? Now, if all of this is going to happen, obviously the bad assets on the books of the banks are going to go up, which is why the RBI came out with moratorium. It came out with this restructuring phenomenon. They allowed restructuring, etc. We don't know what the real NPAs will look like. We can only guess because there is not enough transparency. Banks don't come out with the real numbers. NBFCs are even worse. So nobody knows what the real numbers. My personal estimate is the NPAs could rise to as much as 18 to 20% of advances. So if 1/5 of your book is non-performing assets, how do you expect that financial institution to lend? If I was a CEO of a bank and 20% of my assets are bad, I will try and survive. I'm not going to try and lend at all, right? So no, there is the system as a whole. There are very good banks. There are very good NBFCs. This is not to say everybody is bad, but the system as a whole is in very, very bad shape. Okay. Now, I don't know how much capital is required, but I can tell you one thing, Nidhi. Unless the banking and financial ecosystem comes back in shape, we will never come out of our rut. Because to start the economy running, we need banks to lend money. Unless banks create money and lend money, that you will never get prosperity in the system. Okay, so it is a necessity for banks to be repaired. To me, there are some 3-4 things which need to happen to clean the system. First, this stock of NPAs have to be resolved. Okay. Now you have insolvency and bankruptcy code. You have NCLT for resolving these bad assets. It's a fantastic reform. IBC is a very good reform the government has done, but no bankruptcy system in the world can manage the kind of sizes we're looking at. We are looking at tremendous numbers. Okay. So you need a one-time solution. I personally like something like a bad bank. Ek bad bank create karo, keep all the bad stuff there, let the government own it and let the government try and recover whatever it can. Okay, and it's been done in the past before by other countries, by Malaysia, Korea, etc. So that's one thing, but it's not enough to create a bad bank because the government will take a lot of flack. You're bailing out businessmen, you're taking back good money after bad. Thereafter, you have to do reform. What reform? Banking reform. What does it mean to say banking reform? The biggest NPAs are in public sector banks, nationalized banks. Okay, why does that happen? Because your babus and your netas interfere in day-to-day banking. Okay, they tell you whom to lend to. They tell you which sector to lend to. Lend money to MSMEs. Give money to phone banking in 10 years ago. So get them out of banking. Let banks be. The bankers in professional banks are fantastic bankers, including in PSU banks. Let them run the business. There is something called a P Jain committee, which said what needs to be done to get babus and netas out of banking. So that has to be done. Second, this is only for freeing up the public sector bankers to do their job. It will not solve for governance. You still have frauds, you still have all sorts of things happening. That is across all banks, private sector bank, foreign banks, public sector bank, doesn't matter. It's across all institutions. You need governance reforms, credit rating agencies, auditors, boards, investments, all that needs to be cleaned up, even supervision. Even the supervision by RBI leaves a lot to be desired. So all of that has to be cleaned up. Finally, markets have to be cleaned up. Okay, secondary market in bonds, secondary market in loans, make it possible for MSMEs to go to a secondary market and raise money there rather than having to go to a bank. So all those kind of things need to happen. So it's essentially clean up the bad book, the bad loans, do banking reforms, do governance reforms, do market reforms. All of this is required. The good news, Nidhi, is it's possible, and it's not my word saying this. There are excellent committees which have told us exactly what needs to be done. If we can do all this, yes, capital will be required. You ask the question, where will the money come from? Money is not a problem. If you're putting it for the right causes, please create the money. Doesn't matter. If you're giving it for a good cause, infrastructure, education, healthcare, or cleaning up the banking system, please create the money and give it. Koi tension nahi hai, nothing will go wrong. So there are ways of creating that money. Money is not the constraint. The constraint is the will. Do you have the will to clean up the NPAs and do the governance reform, banking reform, and market reform? That is what is required. If we get the will, we can clean it up.
Do you think the present government, sir, will take this strong action? Because right now their priorities may be something totally different, just survival and maintenance first after containing the pandemic. What I'm trying to say is that whose focus is on this, even if it is doable? It may be too late by the time they take a decision because it will come up with a little bit of flack for sure.
It's a great question, Nidhi. So let me try and answer that. Look, clearly the first focus has to be on immediate relief and immediate survival. Okay, that is fair. You have a medical crisis going on. Okay, you can't talk about growth at this point in time.
Absolutely.
Second thing is, we saw all those migrant workers walking back and going through a lot of trouble. So obviously they have to be taken care of. So the bottom of the pyramid and the less well-off people have to be taken care of. Now, that is understandable. To be fair, I've criticized the government on many things, but to be fair on this score, some work has happened. Okay, after a very poor start, all those workers walking back was terrible. But thereafter, things like the Rural Employment Guarantee Scheme, NREGA, spending has really gone up. We are almost spent the entire last year's full money in this 4 months itself. Okay, so a lot of spending has happened there. Likewise, Food Corporation of India, which buys the produce from the farmers, it has bought record levels of food from the farmers. So it's put money in the hands of farmers. They're sitting on record stocks, which is how the Prime Minister has told everybody, ki, boss, I'll give you food till November. 5 kgs of food grains and 1 kg of pulses. That's great. I mean, you're at least giving food security. People will not die of hunger, right? So that's great. So I think a couple of things which where I'm still waiting for more direction. One is they have not taken care of businesses, particularly MSMEs, right? To say I will give you loans, I will give you a credit guarantee and therefore 3 lakh crore rupees I'll provide through banks. Arey boss, यहाँ पे sales नहीं हो रहा है, bottom line नहीं है, पूरा loss है. अभी loan देके क्या फायदा है? What is the point of giving me loans? Right? I need relief on my bottom line. I don't want debt, right? So that part, I think that the government has not done enough. There has to be definitely more relief coming, particularly to MSMEs. One suggestion I've been giving is there is 20 lakh crores of loans to MSMEs. Okay, you take 12% as the interest rate per year. That's 2.4 lakh crores for the year. 6 months ka interest aap maaf kar do. That's 1.2 lakh crores. Okay, that's only 0.6% of GDP. It will not kill us. Okay, every MSME, give them this relief ki all your interest the government will pay for 6 months. Okay, why is that useful, boss? This goes to the bottom line. This actually helps the bottom line of those companies, right? Now, some MSMEs don't require the relief, right? So you will get extra money even though you don't require the relief. But then you will pay up higher taxes. So at least some money will go back. There are ways of doing this, but I think that part, second part of giving relief to businesses has not happened. The third part, which is addressing banks, addressing all these power sector, real estate, telecom, and making it easier to produce in India. There's a lot of work required. Personally, I'm not seeing enough work, but I'm hoping that, as I said earlier, crisis mein sab sabuddhi aa jata hai. So hopefully we will see the right steps being taken. There is still time. By the way, don't let people tell you India will collapse if these things don't happen. that is not the point. India is a strong country. We will get by. We know how to survive. Even the worst of times, we will survive. The point is not about survival. We need to grow. We have aspirations. So the point is, the more we delay these reforms, it's not that tomorrow hum ludak ke gir jayenge. It's that we are not coming anywhere close to our potential. So just saying that, oh look, we have survived is a terrible thing. Oh, survive, we'll always do. Never a problem. We survived through the British. So why can't we survive now? Right?
Well said. Ananth, most of my industry, I represent the petchem industry and the converters. We have about 50,000 converters, and out of them, 90% are MSMEs. And some of them don't want to take loan, as you rightly said. We don't want debt on our head. The problem is that there is nothing that the government has done to help these, medium-sized industries. They give employment to people. They are the people who actually get the ball rolling amongst the entire ecosystem. And they have not got any help. The richer, as I said, have got more richer in this time because they had huge deep pockets and they could kind of keep their cash flows and their logistics running. The poorer have gone more poorer because the work has stopped, but the government has helped them. The mid-level, which is like our people and the MSMEs, they are the people who are not getting any focus from the government. So you rightly said, if the steps for the MSMEs, the 6 months is going to be music to the ears and such a huge help. It will get so many industries working. I know for my industry it's 50,000. For others, as you said rightly, it is more than probably 34% of the total GDP. So MSMEs need to be really focused from the government side, and nothing has happened for them as of now. We are very sure on that.
Yeah. So look, again, I want to be fair to the government, whom I criticize a lot. It is a tough time. Okay, so it's easy for me as a professor to sit on a chair and give gyan ki, you should do this, you should do that. It's very tough sitting in Delhi and handling all the things you're handling right now. Remember, our border is also not looking good. So, there are lots of things happening at the same time. But here is what I think is missing for government policy making. Okay, I think the intentions are fantastic. Atmanirbhar Bharat, I think, makes a lot of sense as a vision. No problem on that. To actually execute big change at a time like this, where it is a lot of things are happening at the same time, you need three sets of people together. One, you need strong, decisive political leadership, which has a clear economic vision. Ki boss ye karna hai. Okay. Then such a leadership will bring in empowered experts. By empowered experts, I mean people from the industry, people who know on the ground industry mein hota kya hai. Okay, not academics like me, not bureaucrats, but actual industry folk. Okay. Third, you need an excellent bureaucracy, because in India, let's face it, things are complicated. To get things done, you need a lot of good people in the bureaucracy to do it. Right now, everything seems to be the bureaucracy. Who's deciding what plans come out? It's the Prime Minister's office. Who do you hearing coordinating across Niti Aayog, Ministry of Finance, Prime Minister's Economic Advisory Council? It's all Prime Minister's office. Okay, it is bureaucrats. I don't see a political vision on what is our economic vision. I don't see empowered experts. Now, what do I think is required? I'll tell you what I think is required as an armchair professor. Okay, as I said, first, clean up the bank system. That's one thing. Second, please clean up things like power, real estate, telecom, MSME, okay, airline and shipping. These are sectors where power is a great example, Nidhi. Power is not viable. The distribution companies are not collecting enough money. They are taking loans to pay the power producers. Many power producers are producing, units at a very, very high cost. They're not viable. We have to do something, either privatize the discoms or maybe increase tariffs or do a mixture of both, make that industry viable. Otherwise, you're just kicking the can down the road. Somebody has to pay the bill eventually. The government has to pay the bill. So clean up all of that. Use this opportunity, just clean up all of that. Third part, make it easy for entrepreneurs, including your clients. Make it easy for them to create jobs and output in India. There is so much opportunity. Every company wants to come out of China. So create the opportunity. Indians are fantastic. Please come here. Please manufacture whatever you want to manufacture out here. Instead, what are we doing? I know of friends who have ready-made garment factories in Tirupur, who have closed down shop, gone to Dhaka, gone to Vietnam, gone to China over the years. Why? Because even though we have good people here, everything is fine, cheap labor, etc. Point is ease of doing business, trying to acquire land, trying to comply with labor laws, trying to raise capital, the court processes, contract enforcement. If you have to go to the courts, you're dead. Okay, then the policy uncertainty, one day the policy is like this, next day the policy is something else. This ease of doing investments is just not there. Now, here is the beauty, Nidhi. Like I told you right in the beginning, all this is solvable. Ease of doing business, and this is real ease of doing business, not the fraud numbers that we get out of that metric, right? The real ease of doing business on the ground can be improved. There's nothing. Yes, it's tough. It's not easy, but it can be done. For doing all these huge, and finally, the fourth thing, one thing that we have learned from the pandemic, we need to invest on our children's health, education, and your nutrition. These three things. We don't know what the hell we do, but our biggest strength is our people, our demographics. Yes. The only thing we can do is make sure they're equipped well, the children are equipped well to handle the future. We don't know what the future is going to hold, but at least let them have education, healthcare, and nutrition to be able to face up to the future. These four things, banks, all these other sectors, ease of doing investments, and focusing on our children. This has to be done. You cannot expect bureaucrats alone to do all these four things because these are big changes. Yes. You're not asking for incremental changes. Don't get me wrong, bureaucrats are fantastic, but I'm saying you need, for instance, when we got Aadhaar done, it was Nandan Nilankani who came from the industry who got it done. Correct. In 1991, when the reforms happened, you had people like Montek Singh Ahluwalia, you had people like Manmohan Singh, who were practically outsiders, who came in and worked along with bureaucrats and political leadership and got things done. So right now, I think the one thing which is missing is the lack of vision and empowered outside experts. Get everybody together in one room, let them all work together. I think every problem in India is resolvable. We can make it an opportunity to actually grow from here.
Absolutely, because the base is itself is so low, the expectations are so low. We've already kind of hitting, I hope it's a rock bottom, that it's easier to get cleaned, and we are all ready that jane do, 2021 ko jane do. We are cancelling that balance sheet completely. Ananth, you mentioned this China point, which is really, really close to my industry because, a lot of my converters import a lot from China, whether it's raw material because it comes at a lesser price or it's machinery. And also there's a lot of competition because we produce finished products and a lot of it is imported from China also. I have spoken to a lot of leaders in this series, and though it sounds very nice that, the anti-China sentiment, India should be able to kind of gain out of that. Most of the companies are not willing to ship from China. Even if they have factories there, they say, no, we are very good with our productivity as well as our output there. We don't want to shift. The companies that I'm asking that whether you're importing this thing from China, would you like to? They said, no, we are okay with it. No one is saying that we're going to look at an alternative. So my question remains that when India is being looked at as a second alternative to companies who want to shift their business to China, is it really happening?
So the opportunity is definitely there, Nidhi. Let's start with 40,000 feet and then we'll come to the ground. Okay. Fact is, even China itself is trying to upgrade its economy. From earlier being the manufacturing factory of the world, it has a vision called China 2025, where it wants to become the high-tech, high-end kind of production, which means your production of smaller things, the less value-added items, it doesn't want to do, or it wants to migrate away from there. So therefore, there is an opportunity at every level, right from the bottom itself, right? Second, China, the geopolitics is changing. This trade war between US and China is not just an issue of Trump and Xi. It is beyond that. This is a generational issue. It will remain for a long, long time. Just as you had Cold War between the Soviet Union and the Americans, this is going to be a long Cold War, which means there is a whole block of people who will try and reduce their dependence on China. Okay. Thirdly, look at our opportunity. China, the per capita income is $10,000. Our per capita income is $2,000. We are 1/5 the cost in theory. And we have good people. We know we have good people, hardworking people, people like Samsung, Hyundai, who have opened factories, LG, who have opened factories in India. They're doing very well. They know that things can work well if a few things are taken care of. So in theory, lots of opportunities. Last thing, Nidhi, it's not just for exports. We are a huge consumer market, 1.3 billion people. Yes. For our own production, we can produce. Why should, Apple not produce every single phone, the total phone, not just, assembly? Get the chips, get everything to be made in India eventually. Why should not, Boeing or whoever is manufacturing planes for us make the entire plane here in India? So purely for our own market, there is a lot of opportunity. Now, there is no shortcut. You can't switch on and switch off and say, tomorrow I'll take over from China. China has invested in this for the last 3 decades. And they have done a fantastic job. Okay. The reason why they're so competitive when it comes to the cost structure, the entire ease of doing business out there, and they're so embedded with all your clients as well. They've got an extremely well-oiled machine. So for us to displace China, we are trying to climb Mount Everest. It is possible, but do not belittle the issue. Do not say कि boss मैं कल निकल जाऊंगा, कल पहुंच जाऊंगा. नहीं होगा ये. This is you have to work for at least 5 to 10 years for you to make a decisive move and get your share. And there is no master stroke available. ये नहीं है कि मैंने बस ये एक चिट्ठी मैंने sign कर दिया, everything's got solved. नहीं है. This is a war. This is going to go on for a long, long time. It's a game of inches. When you're climbing, it's 1 foot at a time.
Correct.
And be ready for it. So it is a long haul. Just as China over 3 decades became China, we can define the future, but it will take time. You have to be patient. You cannot say मुझे कल बनना है, नहीं होने वाला है. Now, there are small things you can start doing right away. So, Ajit Ranade, my close friend who speaks of this very well, he says, listen, if you look at why ready-made garments, China is the #1 manufacturer. It's because they have one region where he calls it zip to Zara. They produce everything from the actual zip and the fibers and the threads, etc., all the way up to designing the clothes and getting it ready for Zara. Okay. Look at our own things. We have all small people, MSMEs, who are doing most of the operations. They're all distributed all over the place. We don't have a deep sea port. So we just don't have the scale or the vision of getting everything into one place and trying to grow the small business into big businesses and becoming, comparable to a China in terms of this will not happen overnight. But can it happen with some bit of vision? Can the government set aside some land and say, "Ki boss, ye land मैं आपको देता हूँ, करो इस पे, जो करना है कर लो. I'll give you tax holiday, I'll give you land laws, I'll give you labor laws, easy कर दूंगा." Absolutely possible. So do it in steps. Don't try and declare victory every day. नहीं होने वाला है. It will take years. But if you take the steps today, no reason. Our trade deficit with China is $50 billion. There is no reason it cannot come down to zero in 10 years' time. But to say I'll make it zero tomorrow, impractical. नहीं होने वाला है. More than stable political dispensation, etc., empower experts. Get people who understand what are the issues of, I don't know that. Okay. So maybe get an industrialist, maybe get Pawan Goenka, maybe get Mahindra, whoever, people who have done this on the ground and know what the issues are. Get them in charge of making it easier for people to do business in India. Right. I'm sure there are lots of good people amongst your clientele as well who can help in this whole process. Right. So that you're absolutely right. It requires a lot of hard work. And it requires guidance from people who understand what needs to be done on the ground. And then, empowered experts, as I call it. Sorry, please go ahead.
No, very well said. And I think a lot of these people also want to help. If they formed committees are formed by the government and they are given the power that their, recommendations can be implemented, it is quite workable. India, there is no dearth of extreme knowledge with experts. And they themselves are running factories in China. So they know the insides there itself. Yeah. They will be the right people to guide. We have heard that about 5 million jobs are already lost in India as per in the last probably 4 months. And it's actually going to go higher because a lot of these mid-sized companies are tumbling down. They are kind of shutting shop. What do you think the way forward for the unemployed youth is going to be? We know about the skilled labor that has gone to the villages. That is a separate sector. But do you think the unemployment will see more depths? It will go down further?
So Nidhi, I'll take this in 2 stages. Look, at the moment, consumption has also come down because of the health condition, right? I have an aged mother in my house, so I'm not going out anywhere, right? So my wife and I have stopped seeing movies. We've not seen a restaurant for many, many months. So our discretionary consumption has come down dramatically, right? Now, as and when hopefully this medical condition eases and people start coming out and doing normal activity, consumption will go up and employment will come back. By the way, the actual numbers on employment are very difficult to fathom because we don't have official statistics. CMI ka data aata hai, that is there. CMI shows a very bad picture. I think the last report showed 21 million jobs, salaried jobs lost. 2.1 crore salaried jobs, which are the high quality jobs, have been lost. And they've been replaced by things like Narega, etc. People have got jobs through Narega and then lost money, salary jobs. I don't know if that number is entirely accurate, but that's what the CMI report shows, and they generally do a good job. Anyway, but some point is some of it will come back when activity starts. So for instance, now metros have started. As and when railways start, then all the people who support the railway ecosystem will start to work as well, right? So as and when buses and local trains start, the next bunch of people will start to work as well. So some of it will come back slowly. It will take a long time, but some of it will come back. But our fundamental problem, which was there even before COVID, that we were not creating enough jobs for our people, still remains, right? 44% of our workforce is in agriculture even today, only producing 15% of our GDP. And they are not in agriculture because they love agriculture. In fact, the young kids want to get out of agriculture, but they don't have jobs. What do they do outside of agriculture, right? So we've not created those jobs. That goes back to what I mentioned, that beyond the short term, we will see a blip, but we should not celebrate that. That is not celebration. What we should work towards is how do we create long-lasting jobs in India, jobs and output. That requires all the four things I mentioned to you. First is cleaning up the banks. Second is cleaning up the other sectors. Third is making it easier for clients of yours to create jobs and output in India, land laws, labor laws, contract enforceability, etc. And finally, please start investing today on healthcare, education, and nutrition for the children, because they are the people who will come.
These are called the Ananth 4 principles. I'm going to be labeling this session as that. Ananth, the government is contemplating major impetus to expenditure for the infrastructure, roads, construction. It has been on the wish list earlier also, but now the skilled workforce has shifted to their villages, and the government has come out with the plan for employing them. Where will the money come from? Where these projects will be funded? Will people be kind of investing in these industries now?
Nidhi, the way I see it, money is not a problem. Money, the constraint of money is in our mind. Okay, so I'll tell you how I think the money works. Okay, let's say a bank gives a loan for an infrastructure project, or let's say the government funds the infrastructure project. So what happens? Money is created. It goes into, it pays the workers, it pays the raw materials, and therefore it gives money to the system. Money is created. Along with that money, because some investment is happening, let's say we are creating a road, or we are creating a power factory, or we are creating a deep sea port, or education, healthcare, hospital, etc. So when that happens, some activity and output is produced. As long as you're producing output and jobs, that cycle can continue forever. How did China grow to become China? Do you know, for instance, Nidhi, and I'm sure you know this, China, the amount of private sector debt, household plus private sector debt, is 240% of GDP. 2.4 times that GDP is the outstanding debt. For India, it is about 70% of GDP. Okay, 65% to 70% of GDP. Okay, and we are saying, oh God, we have got too much of debt. How can we create more money? The point is, you can create money as long as it is creating output and jobs. If you're creating output and jobs, that money comes back, you create more demand, more investment, more salary, more savings, more investment. It becomes a nice cycle. Where we have missed this out is in the government spending, we have not created capital. We have used the government spending for what are called revenue expenditures, which is, loan maaf kar do. Give a subsidy to somebody else. All these are good. I'm not saying no, but if you're creating money like this without creating output, you will create inflation, you will create an exchange problem because you're not creating output. All that money will go and start buying things from China instead of buying things made in India because there's nothing being made in India. So the point is, as long as you're investing to ensure that output comes out of India, you can pay whatever you want. Everything will get, there'll be no inflation. The production is coming domestically. Jobs are being created. The key thing, Nidhi, is make sure that whatever you're investing in is creating domestic jobs and output. China fudges everything. Their GDP data is wrong. Their COVID numbers are wrong. Half the population doesn't know what's happening next outside world. But they can get away with all this because they've created jobs and output.
Correct.
So the bottom line is that please create jobs and output. Uske baad jo karna hai kar lo.
Absolutely correct.
That's the part that we are missing. If you're therefore investing in infrastructure to create jobs and output, please go ahead. It will pay for itself. Koi tension nahi hai.
You're saying, reminding me of this, that a bright student who's getting good marks, gets away with all the badmashi that he does outside the class. That's the China example. I have last two questions for you. That, COVID has proven to be a boon for certain industries like e-commerce, online retail, online education, the OT platforms, pharma, internet usage, my own industry, the flexible packaging, laptop sales, etc. Do you think that this emerging trends will sustain, or will they become a way of life and change the consumer behavior, or will they come back to their original levels shortly after the vaccine?
I think COVID will mark a big change in the way businesses operate. Okay, what you and I buy and sell will change. How you and I buy and sell also is changing. Everything is changing. So clearly some industries will emerge winners. Okay. So for instance, I'm sure every government in the world after COVID will spend more on healthcare. So all industries related to healthcare, whether it is, diagnostic equipment, whether it is reagents, whether it is medicines, whether it is pharma, all of them will do extremely well, as will construction of hospitals and, hospital type of institutions, etc. Okay. Likewise, you're seeing already what's happening to the NASDAQ stocks. All the online e-commerce, entertainment, your Netflix, your FANG stocks, they're all doing extremely well. Why? Because whether we like it or not, work from home, work from, use digital media is going to increase the way in which we change. So that's again, what looks like a big change going forward as well, right? Here is my take, Nidhi, and if I knew the answer, I wouldn't be here. I would be out making money. I think every business of ours is going to change. So for the MSME clients of yours, there are two challenges. One is survive right now and make sure that you don't get hurt going through what you're going through. The second is try and imagine what life will be like 3 years from now and be amongst the first to figure out how life will be 3 years from now. Businesses will change, right? So for instance, I can tell you, take media, for example. I can tell you that newspapers probably are going to not be there, many newspapers going forward. It's all going to...
My father is 83 years old and he doesn't start a day without a newspaper. And through this pandemic, he's learned how to read the e-papers, which is like this, we're not going to ever see a paper again.
Absolutely. So likewise, the use of digital there is going to change in a big way. More topical for India, in the short run, I think the rural economy will do well. The point being that, as you said, a lot of workers have gone back to the villages. Agriculture is looking good. Monsoons are touch wood okay so far, so they're doing well. The government has spent a lot of money, Narega, the Jan Dhan Yojana, etc., etc. So they've given a lot of money into the rural hands. Money is generally shifted to the rural hands. So anybody who's, FMCG or even your basic consumer durables, etc., which have a rural demand, look at tractor sales, look at your, even your two-wheeler sales in the rural areas. They've gone up quite dramatically. So I generally think rural sector will do well in the short run. The digital aspect is another big one. And then industries such as healthcare, technology, etc., I think will have a big future. But
absolutely. Thank you for sharing all these thoughts. I think you've given us a lot of, as I would say, headlights into what to expect for our businesses, what the policymakers should say, and seeing from the 360 degrees angle, what the bureaucrats as well as the government needs to do. So my job now is to get this message across to at least my government, which is the DCPC and the Ministry of Petroleum and Chemicals, and few political leaders who make policies. PMO office, I do not have access to yet. I would also like to end, Ananth. I know that you've got a very thinking mind. You must have sat back and thought that, on a personal level, this pandemic has also given, as you said in the beginning, a personal big blow. What are the things that you have thought that we need to change at a personal level? For yourself, maybe.
Lots of learnings, Nidhi. And I wish I'd prepared for this better, but I'll tell you what comes to mind. First is how, the need to guard against complacency. Who knew this COVID is going to come, right? So we used to do, business continuity planning and all of that, like a box, why are we wasting our time? That need to guard against complacency is so dramatic, right? Don't let things fall into a rut saying sab theek hai. Second thing is, the power of self-doubt. People say that it's bad to have doubts. One thing I've learned, it's excellent to have doubts. the more you doubt yourself, the more you think, the less you end up doing. And whatever you do tends to be a lot more balanced as well. So for instance, if you're sitting in March and April and you saw your stock market collapsing and you didn't know what the hell to do, and you could have easily ended up selling at the wrong time, buying at the wrong time, doing all those kind of things, right? If you had come in, like we discussed, with a diversified portfolio, which is basically saying, I have no idea what's happening, so let me put all my eggs in different baskets and keep it that way, it is so much more valuable. One of my, I shouldn't brag because I've also taken a knock on my portfolio. I didn't have to change my portfolio at all through, very minimal changes. And I have a good wealth manager who helps me a lot, like in your case, who advises me. I'm otherwise terrible with my own wealth. But because I had asset allocation done, I didn't have to worry too much about, of course I worried, but not so much, right? Third is learn. I still struggle with technology. I'm the old school. I prefer pen and paper. I don't really like this, virtual kind of things. But as you said, with your mother, with your father, who's now reading a paper, digitally, we have to learn, right? And we have to constantly learn, read, come out with, and don't be, afraid of change, right? So takeaways for me, therefore, are don't be complacent. It's okay to have doubts. In fact, if you're sure about something, there's probably a problem. It's okay to have doubts. And it's okay to make mistakes as you go along. And third is be ready to change, be ready to evolve. If you can evolve at the right time, it's a very exciting place to be in. It's a very enjoyable place to be in. So there are opportunities. And the last bit I'll leave is that genuinely what I'm trying to do with my own profession right now is trying to see how life will be in 2 years from now. And I think those of us who can get a grasp of how that will look like can really do well. Not all of us will get it right, but I think those of us who can see through this maze will probably do well. So at least while you're spending a lot of time on firefighting, please spend some time thinking about 2 years from now as well.
This session has personally been so valuable for me, Ananth. I'm really saying that, I never thought about thinking 3 years ahead, that how my conference business, right now also, we are thinking that what to do about it. But if we can think with that 3 years timeline, I think that is the brilliant learning that I've got myself from this session. And all my industry colleagues who are going to be watching your show, most of them are MSMEs, are going to take home a lot of learnings. Such crystal clear thinking, Ananth. I've always thought that you really are owner of that. Is going to help my industry a lot. And my personal work will be to take this message across to the policymakers that I have access to. Thank you so much. And we're looking forward to see you on the other side, and pay our regards to your mother, please.
I will. And likewise to your near and dear ones, Nidhi. And thanks a lot for having me. Thanks a lot. And all the best to Elite Plus.
Yeah. Yes. Thank you so much.
Thank you.
Bye. Bye.